Good morning and welcome to the street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners. Raymond James is our guest co-host today. Our featured guest is the President and CEO of IWK Foundation, Jennifer Gillivan. She's here to tell us about the current state and barriers in women's health in Canada. And as well, of course, we want to hear from you this morning on First Call. You can reach us with your questions on Canadian and U.S. large caps, and we'll have Brianne Gardner answer as many of them as she can. The number to call, 1-855-326-6266. We will open the phone lines in about 30 minutes, and of course our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Metro beat revenue estimates in its latest quarter with sales growth up more than 3%. The Montreal-based grocery chain also reported profit that beat estimates. The company noted its frozen distribution center in Toronto resumed operations last week. The two-month shutdown was expected to cost about $15 to $20 million in the first quarter of 2026. Shares of Barrick Mining are up in the pre-market, 2.36% right now. The company is shaking up management after reports Elliott Management has built a large stake in the miner that emerged yesterday. Bloomberg has obtained a letter to employees signed by the CEO mentioning changes to the regional operating model of the Toronto-based company. Two senior managers and a top executive are departing as part of the overhaul. Shares of Lowe's are climbing in the pre-market. Look, it's up 6% right now. The home improvement company topped expectations on profit helped by consumer spending on home renovations. The American company posted growth in same-store sales on strength in its digital channel and home services. Sales to professional contractors also saw continued growth. Lowe's now sees their full-year profit target at the lower end of the previously announced range. And now our top line story. All eyes are on NVIDIA today as the AI giant reports after the close. Analysts are estimating more than 50% growth for both net income and sales for the quarter. The big question is how the markets will interpret the numbers. Let's bring in our guest co-host, Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Brianne, thanks as always for joining us.
Thanks for having me.
Any idea what to expect with NVIDIA today? The crystal ball, the magic, I don't know. Throw some spaghetti on the wall and see if you can read them.
Yeah, exactly. And, we have seen mixed, quarterly earnings have kind of triggered massive swings in the past in NVIDIA's market value. So even if we're going back to, 2024 and, it goes in both directions, which I think is interesting. And just the impact that NVIDIA has had on the markets. Obviously, we have been an investor in the stock, but it is going to be, and I think all eyes are going to be on NVIDIA and really not just the earnings, but the guidance, I believe, will be key. So it's that can really shift sentiment across the entire AI space, especially around demand, margins, and the Blackwell rollout. So given how much that the stock has driven the market returns, really whatever NVIDIA says will move more than just the semis. So it is going to be a major event that we are watching after the market close. NVIDIA alone has driven close to 20% of the S&P 500's return this year alone. So this report will easily set the tone for the broader market. And I do think that volatility is expected, depending on either way, but options imply about a 7% move in either direction. So up or down, which could mean more than $300 billion swing in market value in the S&P 500 in really a single day. And that volatility, yes, is expected, but I think there are so many other AI names that are intertwined with NVIDIA as well, right? Oracle, OpenAI, and connected to the stock that if almost one stumbles, we could see others that could follow suit. So these results matter far more beyond the company. I think they influence hyperscalers, data centers, enterprise AI budgets, which is why investors see this news as a signal for almost the entire AI sector.
And what might be a failure? I mean, there are some heady expectations from the analysts. We're talking revenue, 55 billion. I think it was a 56% increase year over year. EPS, a 56% increase. I mean, are those realistic? And what would the market accept, you think?
Yeah, and NVIDIA will probably meet the strong 56% year over year revenue growth that the market is expecting. But we also want to see how much of future revenue depends on the company where NVIDIA itself has invested. So NVIDIA is part of, yes, our broad-based U.S. holdings, but we still want to manage exposure, and clients need to manage exposure to those chip makers, data centers, hyperscalers, to kind of maintain control or risk over their entire portfolio. So I still think, yes, is that growth year over year sustainable? I think time will tell. I don't think over the long run, but again, being innovator and being a leader in the company, I think has allowed them to achieve that continuous double-digit growth. So again, I think guidance will matter most, as usual. The markets will want clarity on, the demand, on the margins, on the supply, and really whether this AI spending is still expanding, or are there signs of cracks or starting to show some cooling off there?
Now, we just came out today. I don't know if you saw Brookfield launching a $100 billion AI infrastructure program. NVIDIA is going to be a part of it. Is that a factor at all in what's going to unfold over the next 24 hours?
Yeah, and this is why I think it's so important is again, they're so intertwined. NVIDIA is so intertwined with so many companies. It's not like we're just talking about NVIDIA anymore. So I think they have concentrated risk in the ecosystem a little bit, right? NVIDIA powers OpenAI. OpenAI drives Oracle's cloud build out, and Oracle's circles back for more NVIDIA chips. Now you're bringing in other companies to kind of come into that ecosystem that is a little bit of concentrated. That tight loop could be a little bit fragile, which is why I do think it's important for investors to manage, taking profits off the table and kind of avoid that excess exposure or highly concentrated exposure to some of the data center names. Or again, if you have a large position in NVIDIA, it's never a bad time to be taking profits off the table.
It sounds like no matter what, brace yourself for tomorrow.
Exactly.
All right, Brand. We're going to be back in a minute, but we're going to take a look at the markets before the bell. NVIDIA unfolding later today. That's see how things are shaping up on the markets. We'll start with the U.S. futures. And of course, everybody is waiting for NVIDIA right now. On the upside across the board there, the Dow futures up 0.09%, NASDAQ 100 up 0.24%, and S&P up by 0.2%. And NVIDIA releasing earnings after the closing bell. Looking at the Asian markets, it was a mixed bag, cautious side as they await those NVIDIA earnings like everybody else, and we'll see their first reaction tomorrow morning. But right now, Nikkei closed off by 0.34%. It is in a bit of a slump right now. Hang Seng down by 0.38%, and the CSI 300 down by 0.44%. Heading to Europe, similar situation. It's a mixed bag. AI valuations, NVIDIA weighing heavy there. You got the FTSE 100 off by 0.04%, the CAC 40 down by 0.06%, and the German DAX up by 0.19%. So what did the TSX finish at yesterday? Took another hit for tech, financials, and materials. It ended up off on the day by 0.13%, still above 30,000 though. Taking a look at some of the winners and losers, Superior Plus up 6%, Birchcliff Energy doing the same, up by 5.37%, and TELUS down by 5.28%, Capstone Copper 6.73%, it was off. And taking a look at gold, back over the $4,100 mark. It's up 0.94%, again being seen as a safe haven. Also strong industrial demand for silver, pushing it up 2.62%, getting into near record territory again. And copper also on the plus side, 0.96%. Heading over to oil, and Western Canadian Select closed up 1.52% at 48.05. There are reports of rising U.S. inventories and renewed supply pressure from Russia. So that's putting some pressure on oil prices. We saw it went the other way for Western Canadian Select. So how did WTI do? Let's have a look. Yeah, it was off and down below $60 a barrel rather convincingly right now. 3.11% it's trading down right now. Well, for some, retirement is starting earlier and lasting longer, prompting some Canadians to worry about paying expenses once they retire. CTV's Heather Wright has more.
The number of people living past 100 has more than doubled in the last 25 years. And for some, retirement is starting earlier and lasting longer, forcing tough financial decisions.
I think in the economy today, people have to keep working.
According to a survey from Manulife, 42% of respondents say they are worried about paying for basic expenses in retirement. That's up from 28% in 2020. 43% are worried about health care costs in retirement, an increase from 31% 5 years ago. And nearly half say their retirement savings are behind schedule.
That concern around day-to-day expenses, this is something that is a concern for pre-retirees and everybody. So it's not surprising to me that that would also be a concern going into retirement.
While the number of people retiring early is increasing, it's not always by choice. According to Manulife, only 15% of those who retired early did so because they had saved enough money. 33% retired due to their health, while 13% retired to care for a loved one, which is why experts say planning for various scenarios is key.
Disability is a reality as you get older, and especially amongst seniors. It's just really critical that we're planning for that.
Fiona Cassidy is among the 15% who retired early by choice. She says having a plan is key, and so is starting early.
Getting the benefits of accrued interest is, that's a smart way to do it.
Experts say another factor to consider when retirement planning is inflation. And while it dipped slightly to 2.2% last month, the cost of living is still putting a squeeze on those on a fixed income. Heather Wright, CTV News, Toronto.
Let's bring in our guest co-host, Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James, to talk a little bit more about this. Brianne, what's your take on this? I know both of us are years and decades and decades and decades and decades away from retirement, but it is a scary thing, and it does come up in a hurry.
Yeah, definitely. And, a lot of my business is focused on multi-generational family wealth. So helping generation 1 to generation 4. So dealing with a lot of retirees or clients who are transitioning into retirement. And certainly it can be, a scary, I always say almost retirement is like another career for people because of how much time people are spending in retirement. I do believe we saw a big shift kind of post-COVID. Nearly half or 46% of retirees kind of left the workforce earlier than planned. And I do think that was a little bit triggered due to that. Some could have been to, personal health issues or caregiver responsibilities as well. From an investment or from a planning perspective, I do always advise, retirement planning and the timing and challenges that come with retirement. I do think it is important to have a team around you, have someone advising on you, get your money working for you early. The GIC rates that a lot of retirees were used to when peak interest rates in 2023, when you could get a GIC for, 4 or 5, some high 6%. A lot of those are coming up for renewal this year if they were locked in. And now retirees are like, what am I doing with this cash? Great alternative, especially with expected interest rates to continue to come down, would be to look at bonds or fixed income as an alternative for some, income producing assets where you can still target above, that inflationary number and above GIC rate. So that's what I would certainly be looking at right now.
And those are for people who are close to retirement, thinking about retirement. What about younger people? What should they be willing to, I mean, it's always scary investing your money and the possibility you watch those markets swing, but should they be, is that when you take the risks? And do you look at TFSAs, do you look at RRSPs? How do you balance that?
Yeah, I think it all depends on the individual risk tolerance, as you mentioned, especially for kids and grandkids of clients that I have. How much income they have coming in is certainly important. And so everyone is unique in their investment strategy, their risk tolerance, and what that looks like for them and their financial goals. Are they drawing income from their portfolio? Are they in savings strategy? So even for, Gen Zs, millennials, younger generations that maybe are looking at facing more or greater uncertainty and need targeted guidance to help build resilience against financial shocks, or what the future looks like. I do think it's educating, and I do think that comes a lot on us as advisors or portfolio managers to help educate the next generation. I'm a big believer in financial literacy and helping to give back. So yeah, whether it's the TFSA, RSP, FHSA, I always say it's never too late to get started, but the earlier you can start, the better. And really you see that over the compounding growth as well. So for younger investors, sometimes the stock market can be scary, or sometimes you want to be swinging for home runs. But I would say, having a plan first and foremost that aligns with your goals. And then, not just setting a target and being like, I want to achieve X amount a year. I think it is really very specific to what you are trying to achieve.
And are you finding, I mean, we've heard stories about younger people because they're looking, well, we'll never afford a house, we'll never have a down payment, and they're turning to the markets. Are you finding more of them are more savvy about it and are willing to invest?
Yes, I would say we are seeing that across the board. Even, I'm in like the high net worth investment space as well. So we're seeing, how to pass down wealth through the generations as well in the most tax efficient way, right? Without giving as much money to the government as possible. I think that's what everyone's goal is at the end of it. So, even helping the next generation, whether that's grandparents or parents, to maybe giving early inheritance, maybe to help topping up those kids' TFSA, just to get them started and get them understanding, wow, I can build out this cash flow. I can have my own retirement. I can build out to save for my own house down the road. So I do think, again, having a plan is the most important part, whether that's, a financial plan or cash flow plan. But yeah, we are seeing more and more younger generations wanting to get involved, wanting to get educated, and really invest in their financial future, which I think is great to see.
All right. Stick around, Brian. We're going to be back with you to see why consumer spending is on your radar. That's coming up after the break. Time to see what's on the radar, and we are back with BNN Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. And Black Friday, just around the corner, I believe next Friday, you have consumer spending on your radar, and we're seeing some earnings today. First one we want to talk about is Target came out with its earnings today. Let's see, my computer, it had frozen up, but they cut its fiscal earnings guidance, but you're still liking what you're seeing with them.
Yeah, you can see, down about 3%, the stock slightly, but they did really, still remains clear on what is happening, and I think how stretched or resilient the consumer feels. I think essentials are really based on steady but discretionary categories really reveal the real mood of the consumer. So Target posted a third quarter sales decline and cut the top end of its full year guidance. Again, guidance is something that we're watching closely. So they had the incoming CEO, Michael, is really trying to kickstart the business after almost a rough 4 years of stagnant sales, kind of post-COVID as well. So Target said that it's launching an experienced open AI, which allows consumers or customers to shop Target's app with ChatGPT, and that will launch also next week. So, it does have some exciting things in the pipeline. I think cutting guidance is also, trying to set expectations for the future, especially with the tariffs. I think traffic is definitely the number one thing that we're watching. Even small pickups would suggest, discretionary spending is stabilizing just as peak shopping season begins. But people want discounts, and people want right now value, and I think that's what they're looking for. So the good news is, even with inflation and higher living costs, we aren't seeing consumers fully pulling back yet, but they are leaning into Black Friday sales as a way, I believe, to stretch their dollars and shop smarter.
Okay, and the other side of that, Cyber Monday, Amazon, which is also the Mag 7, so it's an interesting combination here, isn't it?
Yeah, and I think Amazon still remains the bellwether for holiday spending. It's already delivered solid earnings with strong AWS momentum and improving their retail margins. And it also set to be one of the winners, as you mentioned, on holiday spending, Black Friday, Cyber Monday. And thanks to their retail sales and really cloud strength, they've done, extremely well. It's expected that we're going to see about 80 billion total spend out of the US over Black Friday and Cyber Monday. Potentially hitting that $1 trillion mark, and Canada about 9.3 billion on a scale. So, we are seeing online shoppers that are going to be dominating the space. In fact, again, they're saying over 70% of US shoppers plan to shop online now. So if you can have a company and business model that has that efficiency, is easily accessible at your fingertips for consumers, mobile accounts, or more than half of their transactions, you're going to be a winner and leader in that space. I think most shoppers are planning, analysts are saying, planning to spend, $100 to $500 range. But more, the interesting thing is shifting a little bit more on essentials. So still tech, and some apparel and kids' gifts, of course. But some of those instead of big splurging items that we have seen in the past. So the shift again towards a little bit more value-driven online first shopping supports those names, as I mentioned, Amazon, Walmart, Apple on the tech side, and payment networks like Visa or MasterCard. I think those companies will capture most of the traffic transactions during the Black Friday and Cyber Monday deals.
Okay, just want to get one more in. We're almost out of time for this, but Dollarama. I imagine it's also a good indicator of how things are going for people as well, especially on Main Street.
Yeah, exactly. And I think Dollarama, stands out for sure in the consumer discretionary space. Value shopping, as we talked about, still remaining one of the strongest consumer trends, and Dollarama has been a leader. You can see there up 33 almost %. So the stock has been resilient, has done extremely well, and benefits directly as households look for everyday savings and, discounts. And I think Dollarama will be there. So I do think that it's going to be a great stock that we continue to own, and we'll have more upside.
All right, we're going to end it there on that note, but coming up after the break, we'll hear from the president and CEO of the IWK Foundation on the current state and barriers in women's health in Canada. And of course, our phone lines will be opening up soon for our first call segment, 1-855-326-6266. You can send us an email as well, firstcall@bellmedia.ca. Shares of Barrick Mining are up in the pre-market, 2.36% at this moment. The company is shaking up management after reports Elliott Management had built a large stake in the miner. It came out yesterday. Bloomberg has obtained a letter to employees signed by the CEO mentioning changes to the regional operating model of the Toronto-based company. 2 senior managers and a top executive are departing as part of the overhaul. Brookfield is partnering with NVIDIA and the Kuwait Investment Authority to introduce a $100 billion U.S. global AI infrastructure program and fund. The new project is looking to make purchases in AI assets across energy, land, data, and other aspects of the infrastructure chain. The fund launches today with a target of $10 billion U.S. in equity commitments. Metro beat revenue estimates in its latest quarter with Sales growth up more than 3%. Montreal-based grocery chain also reported profit that beat estimates. The company noted its frozen distribution center in Toronto resumed operations last week. The 2-month shutdown, though, is expected to cost about $15 to $20 million in the first quarter of 26. And looking at the markets right now, we await, of course, NVIDIA. That's what everybody's talking about and everybody's waiting for. It's some optimism right now. Maybe things have calmed down a little bit. Dow up by 0.2, NASDAQ 100 0.42%, and the S&P 500 up by 0.33. A new report called The Case for Advancing Women's Health in Canada by the IWK Foundation and Deloitte Canada reveals the current state of women's health in Canada, shows the progress made, and identifies opportunities for transformative impacts to advance women's health in Canada. Let's get more on this from Jennifer Gillivan. She's the president and CEO of the IWK Foundation. Jennifer, thank you very much for joining us.
Thank you for having me this morning and for your interest.
Just quickly, what is the IWK for people? It's in Halifax. Just a quick little summary of what it does, and then we'll talk a little more about the report.
Sure. So the IWK's Isaac Walton Killam was a philanthropist who founded and funded the Children's and now Women's Hospital here in Halifax. We're the tertiary Tier 1 care facility east of Montreal for the Atlantic region for pediatrics. And we cover mental health as well for children and youth. And we also cover some of women's health, predominantly reproductive, birth, breast health, those kind of areas. Okay.
And let's talk about the report now. What were some of the biggest findings to you?
Well, the findings are that we as women have the current healthcare system and the research system that supports that system has not been designed for women. We receive probably just around 7% or just less than 7% of the overall arching budget for research in this country. Yet we make up over 50% of the labor force. So that's where our taxpayers' money goes into supporting this research. So that's not a good return on investment for women. Many doctors are not trained across the system, 16 med schools. It's roughly around 9% of their curriculum is focused on what's different about women, what's specific. We do share similarities. We're human beings. We share similarities with men, but there's a lot of differences in women's bodies. And particularly as they approach premenopause, menopause, and postmenopause, and all of what happens to their bodies post that. Heart disease is, still considered very much, and all the science is very much around men, and several cancers. We were only included in clinical trials in the 1990s. Women were, and we haven't had a national health strategy since 1999 in Canada.
And with the, women's vision and women's health and the future of where that is headed, and with the lack of, having more women in these clinical trials, what is IWK doing to try and plan to be a leader, to try and plan to get more women involved in these trials? Or what can we do to kind of continue to be a leader to help, get more women in those situations?
Well, so we started on this journey a few years ago, and our role was really to figure out what we could do in our region, which then led us to a more national opportunity, because we just found ourselves in this leadership role, and we were even working with the European Union. So we're like international, national, and regional all at the same time. I have a line that I use, which is kind of encapsulates. You've got to educate, to advocate, to mobilize, to equalize. And so the educate piece is we have created a podcast called The Fifth Wave, and it's purposefully global. And so we've interviewed, experts from around the world, as well as local people and as well as nationally Canadians. And it's all around sort of uncovering and educating men and women about the bias that exists, because it's a big unconscious bias. And there, I say we are where we are. But once you know what you know, now what are you going to do about it? That's a different place to be in. We also conducted this summer a research survey to ask women, because rarely are women asked. And so we asked them about their health, the state of their lives, from 18 and up. And we were, working with an independent research organization. They said if you can get 2,000 sort of respondents, that will be a good trend analysis. And we did it in the maritime region. We got 2,000 in 48 hours. We actually ended up with 27,371 responses. And it was really overwhelming what women were telling us about their health. And I have a feeling that if we did this anywhere else in Canada, give or take the nuances around geography and culture, we'd probably get similar results. Because what we found is whether women were rural or urban, and didn't matter which province, they were roughly telling us the same thing. And so they basically gave us a blueprint of the things that they need to see change. And so what we're doing locally is we're trying to figure out now in research, how can we change it? Can we bring the private sector and philanthropy alongside with government and actually make some real changes? Because it's going to be the research that's going to inform and change the care. And we're also working with our hospital on ways in which we can reduce, all kinds of access, increase access, and so on. Nationally, Deloitte Canada saw what we were doing and were very impressed with what we were doing. And to their credit, they really came alongside us, and for pro bono, it didn't cost us anything. They worked with us to develop this national paper, because all roads lead back to a national strategy. And if you look at what the Europeans are doing, 27 countries are coming together and they're creating their own national strategy, of which I've inputted into it and signed their manifesto. UK has a national strategy. Australia, New Zealand, we are way behind.
Okay, Jennifer, I just want to jump in. I apologize for cutting you off. We're almost out of time.
Okay.
You mentioned about private sector getting involved. How do you get that investment? How do you draw those people in to help with
They're
this?
coming to us. They're actually starting to pay attention, because their workforce is made up of 50% are women. And they're actually realizing that they've got to kind of do things differently. Also, in the femtech world, there's a $37 billion opportunity, as indicated by McKinsey, who just put out a report, in Canada alone, and $1 trillion opportunity in the rest of the world. We won't be able to participate in that if we don't start getting our national strategy and start working on with our research and with our femtech colleagues to actually bring all that together. But there's a massive opportunity. It isn't just an expenditure, it's also an opportunity for women in this country and for this country as we move forward.
All right, Jennifer, thank you very much for joining us today. We appreciate you.
Thank you.
Jennifer Gillivan is the president and CEO at IWK Foundation. Still ahead, our phone lines are open. Brian Gardner is taking your questions on Canadian and U.S. large caps. Call us at 1-855-326-6266 or email firstcall@bellmedia.ca. Hyundai Motor CEO Jose Munoz sat down with Bloomberg TV's Sherry On to talk about the aftermath of the ICE raids on its Georgia battery plant on the sidelines of the New Economy Forum 2025. Have a listen.
It is very interesting, right? Because as you see changes in regulation, like the tariffs in the United States, you have to quickly react to try to minimize the impact and be more competitive. But we were already on a roll when it comes to announcing big investments in the United States. So we have announced $26 billion in the next 4 years versus $20.5 billion in the last 40 years in the States in a steel factory, also in assembly of vehicles and others, right? But also in Korea, last week we announced 125 trillion Korean won, which is about $86 billion in this midterm plan, meaning through to 2030, because we want to be the best at all the latest and greatest in technology, like on chips, like in robotics, like AI, like in hydrogen technology.
When it comes to the investments into the United States, we heard that some of the workers that actually were affected by the Georgia raid would be suing ICE. What is the role that Hyundai is playing now?
Well, that was an unfortunate event that happened in actually a battery plant from LG, where we are shareholders. And then always trying to be positive. What happened was a very positive reaction by the federal government and also by the state, which I think is going to help fix this issue of the visas once and for all. I think it was clear for everybody that all the workers that were there, they were legal workers. And then the construction of the factory has continued. In fact, a lot of those people that left the country, they're coming back step by step. And we continue the operation. A lot of questions. What are you going to do? Well, we don't make decisions based on the short term. This is a mid to long-term decision on where we want to localize to be stronger. And it was an opportunity that we already had identified. In fact, in March, when we saw the president announcing the tariffs during the Liberation Day, we were celebrating the grand opening of our brand new plant in Savannah, Georgia. Right, so we were not waiting for tariffs or no tariffs. We want to grow in America. It's our largest market, and then we saw this opportunity of localization.
And does it give you more long-term confidence that the White House reached out personally after the raid?
Yeah, absolutely. I think the White House, I think, is very happy with the level of commitment of our company, the mid to long-term investment, the thousands of jobs, right? So we have roughly 190,000 workers in Tier 1 and Tier N suppliers in America. We are adding around 25,000 more. When these raids were happening, we were announcing additional investments of around $2.7 billion, 3,000 more employees, and 200,000 more capacity. So I think, obviously, the government likes what we are doing. There's a very strong commitment to the U.S.
What's happening with the visa issue, though?
Well, we found together a very, very good solution. We put together a group of people working from the State Department and also from the Korean authorities and the representatives of the different companies, which we are helping to coordinate. And we're finding the right type of visa to ensure that the technical workers that actually are not available in the U.S. can go to the States, do the job, and then come back. So that's basically the positive side of this, that I think we found a good solution not only for our company, but for all companies that are investing in America.
Do Hyundai employees feel that way? Because I was speaking to President Lee Jae-myung recently, and he mentioned how the workers themselves may be a bit anxious about going to work in the U.S.
Well, it's obvious that it's normal that people may feel some anxiety, but I think we just need to reassure them. We need to advise them. The U.S. Embassy in Korea has supported us a lot. The Korean government has supported us a lot. And also the State Department in the States have supported us. So, and I think as they will see that people are coming, that nothing happens, we advise them, we help them. So I think everything is going to be okay.
And that was Hyundai Motors CEO Jose Munoz. Still ahead is Swedish royalty landed in Canada. The dogfight over which fighter jets to add to this country's military fleet kicked into high gear. We'll have more on that just after the break. Well, as Swedish royalty landed in Canada, the dogfight over which fighter jets to add to this country's military fleet kicked into high gear. Executives from Swedish manufacturer Saab are along for the state visit to make a sales pitch for the Gripen, adding to rumors swirling that the Canadian Armed Forces is considering the Swedish aircraft ahead of American. CTV's Jean-Vier Beauchemin traveled to Stockholm and took a closer look.
This one, it's a Gripen E.
On a tarmac in Sweden, Saab showed off the fighter jet it hopes Canada will buy.
So it's really state-of-the-art systems packed in here.
Part of the company's sales pitch is that the Gripen is perfectly suited to protect the Arctic.
What we designed the system for is actually to be able to withstand the extreme max in terms of cold, so minus 40, minus 45. We should be able to land on a road on full packed with ice, be able to turn around in 10 minutes.
As the battle of the fighter jets revved up, Saab also suggested Gripens could be assembled on Canadian soil, creating, it says, 10,000 manufacturing and research jobs. But some Canadian contractors say a deal with Saab could also cost jobs. L3 Harrison, Quebec is aiming to set up a maintenance hub for the F-35.
Here we're talking about preserving the jobs of 1,600 Canadians today, the creation of an additional 5,000 jobs for the F-35.
In 2023, Canada agreed to buy 16 stealth fighters built by U.S.-based Lockheed Martin, with an option to scale up to 88. But Ottawa is reviewing the deal in the middle of a trade war. Industry Minister Mélanie Joly said today Gripen's job offer is interesting.
I don't believe that we've had enough jobs created and industrial benefits done out of the F-35.
But Lockheed Martin says about 30 Canadian companies are currently involved in the F-35 supply chain, and that it expects to produce over $15.5 billion in industrial value for Canada, with projects since 2007 and spanning through 2058. Analysts say Canada faces a tough choice.
There's a lot of value to the F-35 contract, as the armed forces have said in the past. It is a fully integrated aircraft. It's the most advanced fighter that we have in the Western world. The question you have to ask yourself, is that aircraft overkill for Canada?
This is how you refuel an aircraft.
Saab hopes an assembled in Canada Gripen will fly.
I mean, there's no secret. Canada has a very skilled workforce.
For Canada, it's a high-stakes decision, and the results will be measured in years to come. Geneviève Beauchemin, CTV News, Stockholm.
And when we come back, Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James, will take your questions on First Call. Time now for your first call. Let's get to the phones right away. Amin from Ottawa, what's your question?
Good morning, gentlemen. My question is about Shopify. Should I buy more? I have stocks and I have cash left.
Okay.
Is it a good buy right now? Thank you and have a wonderful day.
All right, thank you, Amin. And one gentleman, one lady here today.
Thanks for clarifying. Yeah, you can see Shopify has pulled back quite a bit right off of its peak, still up significantly year to date, up over 28%. Fundamentally, Shopify is still a great company, has that global commerce company that provides essentially, internet infrastructure for e-commerce and a lot of tools to start and scale your market and run a retail business really at any size. So fundamentally, the stock scores a 9 out of 10 for us. You're not getting a dividend yield from this stock, but the growth potential and the upside from here looks favorable. For me, with cash on the sidelines and the pullback in Shopify, it would be a stock that we'd be looking at from a valuation standpoint to potentially even buy and ride up. So you're seeing a mix between analysts, if you already hold the stock, to continue holding and ride it, but also a mixture of buy on the street as well. Their Q3 earnings were in line with expectations, which is still positive to see. So again, I do like Shopify from pulling at this pullback, and I would look, if I did have some cash on the sidelines, to be tranching in. It looks like a good technical support level from here.
Okay, let's get some more emails actually right now. And this one's from Jim. Good morning, Brianne. I'm interested in hearing your expert opinion about TELUS, our Canadian technocom giant.
Yeah. TELUS, has been great, reputable, long-term company. We have seen quite a pullback in TELUS, and that was really on the street. You saw, I believe it was JP Morgan came out yesterday and did has been some downgrading on TELUS, just with some concerns on potential dividend cut. And, we have seen that from some other Canadian companies as well, even Bell. But they still are, a leader in the space. space. They still are extremely innovative, have a broad range in their business and the telecommunications sector. And I still think, longer term, they're going to do well. From a value score, the stock ranks a 9 out of 10 for us. From where we see upside, even from here, price target upside of over 20%. So, if you don't already own this stock, I would be looking at buying it or adding to it at these levels, because I do think, over the next 12 to 24 months, that we will see TELUS do well and have a little bit of a turnaround story, even if there are concerns over the dividend yield. I mean, right now their dividend yield's 8.8. Yes, it's high, even comparative to the industry standards. That's more what you're getting for some of the energy names. So for investors who have been riding this wave a little bit, you're still almost collecting a 9% yield with some price volatility. And we do expect to see, TELUS have a little bit of turnaround in 2026.
Okay, let's sneak in one more email. It's from Bruce, and my question is on Palo Alto and cybersecurity in general.
Yeah, Palo Alto, I think still great company in the cybersecurity space, a little bit more extremely volatile. But again, as you get in that tech space, I do think that's where you will experience a little bit more volatility. We own Broadcom and IBM, some other big names, CrowdStrike, but Palo Alto still a leader, has had a significant pullback. Again, not a stock we own in the portfolio, but right now analysts are still seeing about double-digit, about 12% upside from here. And over the long run, the stock has done extremely well, up over 300%. So there's still a leader in the space, in that cybersecurity space. And I think with increase of global spending in cybersecurity and with AI booming, people are going to be investing more in cybersecurity.
Okay, we're going to end it on that note. Brianne, thanks as always for joining us.
Thank you for having me.
That was Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Well, Andy Bowles up next with the open, and the markets will open about 30 minutes from now. Have a great day.